Hello again, and welcome to another of Mosaic's coffee breaks. Mosaic is, of course, a collaboration of the organisations shown at the front of this presentation, and that collaboration focuses very much on the ownership issues associated with mid-market law firms. And when we say ownership, we mean everything associated with ownership, mergers and acquisitions, partnership structures, succession planning, partner exits, and everything associated with all of those issues. I hope you enjoy this broadcast.
Welcome back, everyone, to the second part of our Mosaic coffee break, looking at some of the ideas, suggestions, and tips the five of us have for law firm leaders in these interesting times. Bob, you brought the subject up for us. You set the scene for us. What are you telling your clients at the moment, or what are you suggesting to them?
I think, if I have to pick the number one top tip, it would be to do the accountant's classic, what every FD would be doing, which is a 13-week rolling cash flow, which is straight out of the accountancy textbooks. But it is valid, and as much as it's a building block of many things, it is a very good thing, and that's why it's in all the textbooks. So for the uninitiated, as has been alluded to, cash is king. So as lovely as balance sheets and profit and loss accounts are, a cash flow is the most important document. Ultimately, if we run out of cash, that is game over. So it would definitely need to be a cash flow. 13 weeks, after much trial and error, the accountancy profession prefers that time period. Why? The logic is basically that you want to go far enough forward that you could do something about it. 13 weeks is what, roughly a quarter, roughly 3 months. So if you're looking at it going, oh, blimey, there's a problem in week 11, well, that's 2 months away. You've got enough time to do something about that, to fix it. But why not go further forward than that? Well, the logic dictates that once you're in weeks 14, 15, etc., you are now so far in the future that you are just guessing. And so it loses a lot of its utility because you're now too far ahead. There's too many variables. And rolling is the other word that I used. So that is to say the thing is updated every single week. Week 13 is always moving 1 week ahead, is it not?
So Howard, we're on an accountancy theme. Anything you'd like to either pick up or have you some additional points to make?
Pick up on, and perhaps a little bit of refinement. Pick up on, first of all, the 13-week cash flow, 100% with you there. I find that I've got a problem with 1 or 2 clients who are actually cash rich. And as a result, they're not under any pressure from a cash point of view. And it might go up or down, but trying to change the attitude of mind when they've got money in the bank that cash is important is really very difficult. And what I have tried to encourage those clients, but they're still reluctant, is to put a whole load of the surplus cash into a separate bank account, which the partners can't see, so that they are running on an account that's very close to zero, so they can monitor it more closely. So cash rich can be a problem. And at risk of being the harsh draconian accountant here and the typical accountant, and I don't like to be seen to be a typical accountant, my starting point is often in the budgeting round is to do capacity modelling, which is broadly what we're all looking at here. Chargeable hours times your appropriate charge out rate to give you what the fees billed are. And I have been astounded over the last 2 or 3 years how most clients are down to around about 800 chargeable hours per fee earner. And that's just not acceptable. Frankly, it's showing that they are either overstaffed or not billing enough. And as soon as they start saying, well, we can't bill anymore, my counter is, well, you've got to cut some staff, haven't you? And we could well be getting to that stage where taking a more draconian, harsher view towards the staff, staff levels is going to be necessary. But I can see Mark smiling here with his people person hat on. And as a result, what I again do tend to encourage is KPIs sent out to all fee earners in all departments, so some peer pressure can be applied to getting the billing levels up and the chargeable hours up. But Mark, come on, let's get the counter view.
Well, I was going to say, can I throw a couple of other points, very closely related to that, on the people front? And this is a technique which has revolutionized one or two firms I've worked with, and that is to take our lead from the salespeople. Salespeople can categorize their clients on an ABC basis, where A are the top ones, B are the middle rank, and C are the ones that you could replace if you needed to. Just try applying that to your people and see how many of the people actually you daren't lose, and how many of the people you could potentially replace if you needed to, like with like, or even maybe able to replace with better. It's a very simple analysis, but boy, is it powerful. And it's not always the obvious people who are the A category.
Oh, yeah, Howard challenged me to challenge his view. I think, that view work, you've got to decide what the culture of your firm is. If you have a firm that is really competitive and it's sort of, we are going to tell you how many hours your colleagues billed last time, and we're going to sort of name and shame you if you don't, you may find yourself with quite a lot of employment tribunal cases for harassment and workplace stress and discrimination based on disability, which then, doesn't look very good when you're in the papers for it. So, if you recruit people, say this is a sort of an eat what you kill type firm, and we only want big billers and we don't care, just bill, that's fine. You'll get the culture and you'll get people who may do that. The problem with, of course, recruiting people who are entirely driven by monetary rewards is the minute the firm down the road offers them an extra couple of grand, they're gone. You need to create a culture where people want to be there and want to perform. I think sort of the carrot is much better than the stick in terms of actually delivering these. So I go back to my point about, if somebody isn't billing the hours, their manager has got to sit down with them, their partner in charge, or the managing partner, or the HR professional if it's a bigger firm, to go, why aren't you doing
guys?
Well,
I suppose I better do pricing to end this.
Yeah,
I think we all know, don't we, that pricing is the single biggest lever that any organization can pull in terms of productivity. And just to give a very neat, basic mathematical example of that, a £10 million law firm making a net profit of £2 million a year, or 20%, if it's able to add 10% to the top line by raising its prices to become an £11 million law firm, it also adds £1 million to its bottom line. That's a 50% increase in profitability for a 10% increase in prices. So it's highly appealing, and in times like these, when merely thwacking 10%, 15% on your charge out rate may seem a bridge too far, because we've got pressure from the client side as well as the wage inflation, pricing isn't a panacea. And so many firms that come across my radar think that all they need to do is attend a training course and it'll completely transform their finances. Alas, there's a bit more to it than that. And that's been the subject of a couple of recent blog posts that some of you may have read, which I published on my website over the Easter break and on LinkedIn. What we're talking about with pricing, if it's to work, if it's to give you that edge over your competitors, it's a change management program by another name. You need to change the way people behave, think, approach the whole subject of pricing, and interact with their clients. And that isn't going to be achieved by a half day, a 1 day, or even just a 2-day training session. There's an awful lot more to it than that. Gentlemen, any final points before we bring this session to a close?
Not for me.
No, I think we've covered a lot. Thank you, Nigel.
Lovely. Thank you all for watching this, and we'll be with you again on another Mosaic coffee break in the not too distant future. Thank you all.
Thank you.
Bye.